Hold on one second.
Yes, emergency vote. There we go.
I'd like to call the Audit and Finance Committee meeting to order. Has everyone had a chance to review the minutes? Last time. Can I get a motion to accept them?
I'm going to accept the minutes.
Can I get a second? All in favor?
Aye.
Then next up, let's go to the treasurer's report.
Thank you. If you look at our balance sheet for this committee, we give you the detailed balance sheet, and we do a collapsed version for the board. And just looking at our bank accounts, we are holding $9,500 in an account that were funds that Berkshire Taconic Foundation advanced to us last year for broadband to help schools pay for hotspots and other ability to get families that didn't have access to broadband that did through their cell phone. We then found that there was a federal grant that would reimburse the school districts for that, and we decided that they said, don't give it back to us, hold it until sometime in the future when we either redirect it to an activity we'd like you to work on or some other broadband activity. The Hudson bonds, that's still being carried on the report because we're comparing to last year. That was the program where CEDC managed the issuance of bonds for the Hudson Business Coalition. And you could buy, if you made a $100 donation, you got a $50 bond. And then if a store or restaurant got, someone used it, they would come to us and we would reimburse it. Then you see our CEDC loan account. And these funds are the funds that are available to lend. And we have them on account. And as Martha and the committee and the board approves loans, we pull the money out of these, either the CEDC 770,000 or the SBA aggregate 500,000. So you see, we have about $1,275,000 available to lend right now, and we just went over the $3 million total portfolio amount. Each of the SBA tranches that they lend us, anywhere from $200,000 to $400,000 a tranche that we apply for, has to be put in a separate account. And the RLF is the revolving loan fund, which is the funds available to lend, where the LLR, the loan loss reserve account, you'll see later, is where we have to put the 15% of the amount they provide to us in the when we draw down the funds as cash collateral on top of whatever we work out with the accountants to carry on the balance sheet as loan loss reserve. Then you look at our operating account balance, and we have $402,000. And we also have what we call the reserve cash account, which is $213,000. We separated that out several years ago because I didn't want to have more in the operating account than the county gave us in 1 year. And so that $200,000 account is board directed. And we put it in for future direction by the board as to how to spend it. But that basically gives us $613,000 of operating money, and our budget right now is about $800,000. The next item that you'll see is the loan loss reserve accounts. And when we look at the loan receivables, right now we have $792,000 of loan receivables from the SBA, and we also have so we have 200. We're way over reserve with the SBA, but we do that for a reason. We can because as people pay back, we could take that 15% of what's been paid back quarterly or annually back into the operating account. But each time we draw down money, we have to come up with the 15% for the next batch of funds to lend. And if we weren't able to take it out of the account from the last the available funds from the previous accounts that's freed up because people have paid us back, we'd have to go into operating capital to fund that. So it's really a reserve to the extent that we owe the SBA $800,000, and 15% of that is 120,000. And we do keep, there's a reserve there that protects our operating revenue balance from having to be used for other purposes. And it's better to have cash than with people. If you owe people money, we do owe them that. We do the SBA funding. So that's how you get to our total of bank accounts of 2.139 million. We do a quarterly report, which we will provide you, where we break out by what banks we have the funds in. And right now we're balanced pretty well between Community Bank, which is the old Kinderhook Bank, Key Bank, and Bank of Greene County. We did have $100,000 in Berkshire Bank, but we did move that out to be available to purchase land from for the county. On our current assets, we did Kat Leiden, who just joined us online. She and I have worked on this. We took $22,400 as a down payment on the lot that the county has asked us to purchase, and we're waiting on the closing for that. That sale is $224,000, so we'll have to come up with another $200,000, and we're going to get $100,000 from the IDA, and the $100,000 we moved out of Berkshire Bank to be available for that. We'll cover the expense. When we get down to the end here, you'll see that there's $100,000 that we're holding for the county. So when you take the $100,000 all the way to page 4, the bottom of page 4, you'll see in the restricted area, 71 and 48 county directed. So it's basically more than 200,000 or more than 100,000. And they're going to give us $90,000 from the sale of property from the IDA. So we'll basically be whole by having used county money to buy the property for the county. To the extent there's any gap, either when we sell the property to the county, they'll have to make up that gap, or if we sell it on the open market, we'll net that out of the proceeds of the sale. Jumping back to the assets, you'll see that we have loan receivable from the creamery and loan receivable from Clock. There's the Office of Community Renewal Grant Program that we have been promoting. The only applicant for that program can be a municipality. So if we find an opportunity to assist a business with a grant from the Office of Community Renewal, we put the paperwork together, we go to the county, we get the County Board of Supervisors to approve submitting the application. When the application is submitted and awarded, the state enters into a contract with the county. The county then enters into a subcontract with CEDC, and then CEDC enters into a mirror contract with the entity that's getting the grant. And basic reason we put it on our books is because it's a loan of the money that the county receives from the state to CEDC, who then we loan it to the developer. Now, the Creamery and Clock Estates are the two that we have on the books. The county and the state have entered into an agreement with respect to Kleinkill Farms getting $250,000 for migrant housing. One of the things that happens is after 5 years, these loans become grants. So if they're still in business, there's a recapture. So what we've been doing is putting them on the books now, so that when that arbitrary 5 years is up and they've met all the requirements and we forgive that loan, because it's a grant, we don't have the hit that you'll get to the balance sheet for the income statement that you had forgiveness of debt. There's one on our books for $200,000 for Flanders that will come due this year that wasn't set up that way. The result is we're starting 2022 off with a $200,000 loss. But you know, as a not-for-profit and with detailed footnotes in the audit report, and you know, showing it in our annual report as a set-off, you know, you can show that we broke even or made a modest profit as a not-for-profit, and the fact that there's a GAAP accounting loss of $200,000 can be explained. But I don't want that to happen going in the future, so we're now putting it on the books as a loan, so that when we forgive it, it nets out. You look at our accounts receivable. Kat and I are working through these. We do have accounts receivable from the SBA. We submit a quarterly report to the SBA to get reimbursed. You remember that effective July 1, the amount that we're getting, we went from $180,000 a year, which is $45,000 a quarter, to $232,000 a year, which is $58,000 a quarter. So basically, we're accruing for 2 quarters. We haven't been paid for the June 30th $45,000 quarter from the SBA, and we're waiting, and we accrue it, but we are submitting the paperwork for the September quarter. So when you see $103,000, you say, well, how do we get there? It's 58 plus 43. Columbia County, it's been a little more difficult. The Columbia County, we're showing that we're $5,000 ahead, but that's because they overpaid us. They paid us for the broadband, and they didn't pay it under the broadband account. We have a receivable for $30,000 plus additional broadband work. Since then, they applied it against our county $460,000 quarterly payment, annual. So when I went back to them, I said, well, you paid us on the wrong account. They said, well, we already did that. You work it out. So we're just carrying it ahead. But this month, it'll when this quarter gets paid, it'll be absorbed. The Hudson IDA is just 3 months at $833 a month. We have a $10,000 contract divided by 12. The Shared Streets Program, or I'm sorry, the HBC and the Shared Street Program, that's $3,237.50 or $3,775. That we may have to write off. There was a delay in getting one of the participants in the Shared Streets Program. I'm talking with the city council president now about how we're going to have to handle that. One of the things that I think we have to keep in context is they just renegotiated our contract with the IDA, where we're going to get 10% of up to $10,000 of any project we close. And when we're anticipating getting $30,000 in IDA fees this year, it's hard to get in a fight with them over $3,500. But I'm working to get those funds.
And what's the HBC?
That was when they they're mislabeled here. It was really the Hudson Tourism Board, and the Hudson Tourism Board, and it was Melodious Funk who didn't get their paperwork in for a year, and they finally got it to us. Now, you know, we had loaned them the money because it was for Juneteenth Day festival, and it was only awarded a week before the festival. And we had an agreement with the city that they would pay us $5,000 to administer the program, but we did that not where we were going to collect it, only if somebody defaulted. And somebody defaulted, so I'm trying to match that up. But again, I don't know how far we can push that in terms of relationships. If paying me $30,000.
And then walk away from it.
Yeah, I think they are. They're not going to pay us. I'm just preparing. The broadband, again, we had submitted a bill for 30,000. They paid it on the other account, so we're resubmitting that bill. The 7,000 that's there is additional broadband work since the first contract expired. We're kind of carrying that, although they have not yet paid us. They have not. We don't have a contract for that, but they have agreed. Matt Morrell told me yesterday that the county has agreed to sustain our annual amount at 460, and the broadband we have in a budget of 60,000. So, Columbia Forward, that's the program where they are giving us $150,000 a year for 3 years. We keep $85,000 of that annually, and we pay the 65,000 to the chamber. So we are getting 65 for salary towards a salary for Columbia Forward, and the chamber is, but we're getting $20,000 on top of that to administer it. So the 150 annual, we take 20 for operations, we take 65 for salary, and we give 65 to the chamber. What I've done there is, you'll see later on, there's a deferred income. They paid us, even though the program didn't start until July. The original contract and was supposed to have been approved earlier. So they paid us for January to July. So we're really prepaid for 6 months on the tail end. So you'll see I have in here deferred revenue, because if I put the full deferred revenue in as revenue now, it would overstate our true profit, because we haven't earned that much. In the Columbia IDA, it's a quarterly payment. They pay us $2,000 a month. I don't know why it's an extra 500, but we can look. And the CRC, they owe us $570. We had to pay their insurance premium, but we also made a grant to them for $3,000 that we'll get ourselves paid back. As you can see on the loan fund, why is it a negative 69,000 and then a positive 1064? We have Down Home software, which is the loan software package that we're using, and at this point they are set up where the 69,000 was the principal that was paid in the month of September, and we're still trying to figure out with QuickBooks how to net that out, so you just see the 994. But basically the amount outstanding as of August 31st was 1064, and the principal payments were 69,000. But the way it gets uploaded from this other software package, we're not able to show it netted out. The loans receivable from the SBA are shown on here as well. So if you take $1,864,000 outstanding and $1,200,000 available to lend, you get to our $3 million loan portfolio. Our fixed assets included $5,200 that was due on the Commerce Park, but they paid us in full, and so again that should be netted out. They paid us $5,200 where they owed us $5,293. I think we'll write that off. They had paid us over 5 years. It was over a $40,000 purchase. And you'll recall the board has given them, I think we gave them a 9-month extension to complete the project, or we have a $45,000 penalty mortgage that they would have to pay. But this note was related to the purchase of the property and the stated amount, not the penalty one. The end of the year, we have bought some additional computer equipment, so the accountants will probably move that from into the fixed asset category. So we really haven't made much of an adjustment to that. and other than with the commerce part. Our other assets are the security deposit on our rent, on our facility here, to the landlord who's looked at that contract. We're 3 years into it, but we have a 5-year lease. We have an automatic 5-year renewal. But I do at the 5-year renewal, I think I want to get another 5-year renewal, or at least present to the board that option to lock it in. But I get starting to get nervous that do we really have a 5-year renewal or not? Because I don't want to move, and this is a good location for us. The allowance for bad debt, we have 45,000, 130,000, and 102,000, for a total of 278. 278 on $1.8 million outstanding, when you have 229,000 in cash for the SBA, is well overstated. But we had at one point here, the year I started, we were doing a different type of loan program. We were making $100,000 loans for hotels and things rather than the small business loans with the county funds. I think we wrote off $400,000. So we're not in that risk category again, but if we have it's a good thing to be over reserved when you're dealing with small business clients, especially. We were in good position if during COVID we had any failures or not. But again, last year I think we put 75,000 in because we had $100,000 profit. And I said, well, it's good as a not-for-profit to show you had $25,000 in profit, but if you show 75 and you don't put it in that reserve account, you can never do that later without getting your P&L. So we're done with commerce land sales. This is the $200,000 grant receivable with Flanders. So you can, when you get to the net assets or total assets, you get 4.2 million. Our liabilities are our accounts payable. You can see Cat's got us $6,500 ahead from last year in terms of being paid. Our current liabilities include some payroll accruals and the accruals for several employees do using their own funds as payroll deductions, have AFLEC accounts. We do have an accrual for the paid family leave, the 401k. 2 employees are still eligible for the vacation buyback. We changed that several years ago. It's a holdover from government where if you don't use your full vacation, we have to buy 50% of it back in cash. We now allow you to roll over a week if you don't use your vacation. I think it's important for people to use vacation, to be particularly at least a week at a time, to get recharged. But that's a legacy for employees who were eligible for it prior to the change of policy. I've accrued $5,500 in EIDL interest. Several years ago, we took a $100,000 EIDL loan. Our theory was the county cut us by 90 grand that year because of COVID. We felt that if we were eligible for the $100,000 loan, it's at 2.75%. It's 30-year money. You'd never use it for operations on a 30-year schedule. But our thought was, if we got cut the second year and we were reducing our operating capital, we could pay it back over 5 years and still provide the level of service during the pandemic that we were providing. That we've not paid that back, and the interest has been accruing, and we did not accrue it in 2021. So that's what's due in interest on January 1, when they accrued interest, but they let people defer the payment of it till 18 months after a certain date. And then starting January 1, you'll see in the budget, I have in there a payment for to pay that loan. And then I think at some point we'll pay it off. I wanted to keep it until we got through the sale of purchase of the county land, and in case there was a delay in moving the $90,000 over from the IDA. Deferred revenue. We've got again 5,700 in deferred revenue from the Berkshire Taconic Foundation grant. We've deferred $37,000 of the county money. This shows $45,000 of other current liabilities. I think, Kat, that this report was printed before we made that adjustment because we were double counting for something, weren't we? So that will be adjusted. And then
Yeah,
I'm
sorry about that. Yes.
I'm sorry.
Yes.
No, we did correct it. This 45,000 is the match against the Hudson Valley Creamery loan, and the 150 is the against clock. I'm sorry. So you now come down and see the $100,000 EIDL loan. You look at the loans payable to the SBA. We owe them $1 million. 15% of $1 million is 150. We have 229 in that account. So we basically have $70,000 over. And if you take 70 and divide it by 15, we can take another $466,000 of SBA money without having to go into our operating account. The other thing with the SBA is if there's a loss in any one of the tranches, we have to pay the SBA back. Now, often, we use the CEDC loan to buy back that loan and restructure it for the client. But if there's a loan in the SBA tranche that defaults, say there's $100,000 in that, and we have to have 15 in the reserve account, and a $30,000 loan defaults, we have to pay back the SBA 30, and we have to recalculate the 70 and put 15% on that. And it's basically the reserve is not only to sustain us with new SBA funding, but it enables us not to have to go into operating revenue or operating reserves by keeping the money in the reserve funds, $70,000 more than half. And so we have two ways out, because if that happened, we'd have to pay 30. So now we'd have to come up with 15 because there's only 15 in the reserve account, and we'd have to come up with $10,000, 10.5 more. So we'd have to come up with $25,000 to make that tranche of SBA money whole to move forward after a $30,000 loan and a $100,000 portfolio went under. And this way we don't have to come back and have a hit out of CEDC. That brings us down to total liabilities of $1,439,000. We have capital assets of 12. The SBA micro loan, the county directed, and the net brings us down to a net position of 233. This month we had $80,000 in net income, and so it gives us total equity of 2.8 million. I know that was a little more detailed than we've gone into before, but I think for this committee, then as we go into the budget, and also if the board has questions related to the collapse version. More quickly on the P&L, administrative revenue is broken out for the IDA, the two IDAs. On the county, we've got 345, which is 9 months of the 460 that we have under a county general contract. Columbia Forward, we've booked 84,997. We're going to break that out further because that includes the $25,000 that we receive from the county to fund the. We have $50,000 contract with the county to give grants to people that get loans, small businesses, up to $2,500, and they gave us, the 25,000, and they gave us the 75,000 for the first half of the year. So, what we've done is all in, we've received $125,000 from the county, but we're only reporting 84 because we're holding the rest in the deferred accounts. On broadband income, they owe us 30. 10 of that was a carryover from a receivable from last year. 20 was this year, and 7 is the additional work that's been done under the respective contract. Grant income, we do have this one loan. We're showing. Remember, I booked $5,500 against EIDL. Then when we did EIDL, we only had 6 employees, and you were supposed to get a $10,000 grant. You got an EIDL. Then they said that you could only get $1,000 per employee, up to 10,000. Then the Congress got mad and said that wasn't what we intended, and we had the ability to apply because we only had gotten $6,000. Martha pointed this out to me. She was working on it with some of her clients. That we were entitled to the 4,000. So we booked that as additional grant income, but that was that made up for the sin of not accruing it the first year. And then this loan interest and loan receivable, that's the Angelo project, which it was in deferral for quite a while, and then Joe picked up his payment schedule, and that was originally community development block grant money, and long before I got here, and so it was always booked as a grant, not as a loan, but it comes in as interest and principal, and that's down to about $12,000.
Yeah.
And it was up as high as 40 at one time. Yeah. So it shows that by working with people, you have to be judicious as to who you can put faith in, that you can get your money back. Loan interest to date, $52,000 for 9 months. You remember we did drop our rate for a while to 3.75, but we take 53,000 divided by 9 times 12. We're going to bring in $71,000 this year in interest. That's a whole nother discussion because we leave that interest in these loan accounts rather than taking some of it to cover operations. And partly we did that because we wanted to get the loan fund up to $3 million so that there were some efficiencies and economies of scale. But, in some places they take 8%. The Community Loan Fund of Capital Region, for instance, takes 8% of their outstanding balance. So, we have to look at what point do we start taking a fee from those funds, because when you look at the report by class, if we hadn't gotten the additional county money, you'll see that we're operating at a loss, but we're on and so it drains cash. Because if you're operating at zero profit and you're operating with an operating loss, but it's being supplemented by revenue you book or income you book for loans that you're restricting the cash, you're reducing your cash reserves every month because you're leaving the interest that you need to balance the operating expense. So I think that we're at a point now where at $3 million, I haven't budgeted to take any of that interest income into operations. It's there as part of the overall income and expense. But I think as we get closer to 2022, we should get some sense of what other similar loan funds are doing and see what a reasonable amount is to transfer cash from the interest that's earned on our loans into operations. Membership, you know, we're going to be $12,000 to $13,000 off our budget. You know, as you've heard from board meetings, we let membership be lax during COVID. Jessica and I have, and Rick sure have met with a consultant who does economic development consulting and is working with us on getting a membership campaign finalized. So by November 1st, we can go back out. You know, we have a pyramid as to, I think for next year's budget, I projected 60, did I? 65,000. So, you know, if we can get 10 at 2,500, which we have had in the past, and then, you know, how many at 1,500, how many at 750? You know, we're going to work on, you know, the basic fundraising pyramid of getting to that number. You know, we're halfway there doing nothing. I don't want to say that to someone that's giving us dues. And I do think we're going to have an issue as people at the higher end know how much we're getting from the county in all these buckets. And, you know, we're getting all my tax dollars. Why am I giving you discretionary dollars? But we are moving forward with attempting to get back into that game. We had some miscellaneous income. There's fees. There's you know, it's not a lot of it. It's not. We haven't booked it as a big number. We are showing 6 months at $45,000 and 1 month at the 1/4 of 220,000 for the microloan grants. And so we're showing 735,000 versus budget of, so we have up $105,000, and most of that is attributable to the county's contracting with us for more services. On the expense side, we're under budget on conference and training. I try to budget $300 to $500 a staff person. I think it's important for staff to go to a conference, and at the lunch, you always realize that the grass isn't always greener at the other side when you're talking to the other participants at the conference, and you always learn something. Consulting fees are down, but some of that is because some of that expense was put in under new initiatives. The housing consulting and the operational consultant amount is down. Direct program expense was the annual meeting at Kozel's, and the last time we had it in person, we spent because the speaker wanted to have slides. Kozel doesn't have that capacity. We had to pay $1,500 to one of these companies that come in and put the pipes and the drapes and the television screen in on a rental basis. But this year we didn't have to do that. Our employer total expense is down by 48,000, but that's because we haven't had the opportunity to replace Lauren Prana, even though it's budgeted, and it took us time to find Jessica to fill the project management job, and so you know, that savings is the result of, and it was somewhat reduced by the fact that we did do July 1, we did raises. Yeah, and we did some adjustments based on looking at what some of the local salaries were and what the county's salaries were. Now, you know, if you look at that, it's going to be significantly increased next year because we're going to have a housing coordinator. Jessica will be here for a full year, and we will still have Lauren.
That's a new person coming in.
You do.
Oh, yes, an administrative assistant. So when you look at the fringe benefits, you know, budgeted at 35,000 and the taxes at 20. And you divide that $55,000 by the 288, we are at about a 21% benefit, tax and benefit overhead on salary. Facilities, our rent goes up 3% a year, but we got a great deal when we came. Our grant expense, we did give the grant to CRC, keep them in business for as long as we think it's appropriate. And we did have given out $7,300 in Columbia Forward grants, but that money came directly from the county. We're down on insurance, but I have asked Peter Finger to give us a quote, which we got yesterday. I want to understand what it includes, but we are going to up our cybersecurity and our employee coverage, and the employee and that the employee coverage is relating any claim made by an employee, and it will be an increase in coverage under the director and officer's liability. So we're not going to use up all of the variants, but I think with cyber, small not-for-profits, even though we have a good tech outside third-party tech company, I just think it's important to up that. And on the employee thing, it's really just to cover any council fees. Micro business expense, we spent $36,000. We've got Martha and I are working on ratcheting that up a little bit so that we're in a position to fulfill we don't leave any money on the table at December 31st on the grant. The grant is reimbursable based on and how much did we have for that, Martha, that we have to do this quarter?
For this with our budget.
Yeah, so and we have certainly a pipeline of clients that can benefit from that work. Our new initiatives, partly why it's over, is the accountants didn't allow us last year. We got a grant from the Hudson River Bank and Trust on behalf of the town of Stockport to improve their park. They made us report that $15,000 grant last year because even though the expenses weren't incurred till this year. So, we're kind of trying to work with them on that, not to be in that position going forward. We did have the housing, which we had not budgeted for. That included the $8,500 study with Pattern for Progress and about $2,000 to Duncan Barrett Consulting for the Columbia Forum and other guidance and advice. And on the workforce and education, that was the money, the $15,000 we paid to Columbia Green Community College. We used to run the Columbia Connect high school program. So that wasn't, it was more of using our own staff and absorbing time. When we became a sponsor of it by paying money, that's what Dr. Drummer had allocated to us. Office expense, let's go back to that in a minute. I've broken that out a little bit here. If we jump down to other expenses, basically some miscellaneous. We've done a couple of $50 or $100 donations when board members, family has a memorial, and the EIDL money. Professional fees, we got to get after our counsel. He's about 2 months or 3 months late in updating his bills, but year end's coming, so his partners will be all over him. So the CEDC savings account, right?
I think we should make sure when we say that it's over, it's because of the account, not the attorney.
Right. Well, and remember, the accountants were over because we have to do that single audit, and and because we did bring in someone to work with us on remember the accountants told us we could no longer use them for day-to-day guidance because of this higher level standard of audit because of our amount of federal funding we were receiving. So we did retain a company to assist Kat and I on those issues. SBA interest, we haven't paid them anything, have we, Martha?
Well, we are.
So I guess we have to figure out where that's being booked. It's very minor. It's 1% or something. So yeah, I think we're doing really well. You take this document that I gave you, and that's yours, and Andy, you and Justice at night. I wanted to break out the office expense just to give you a sense of how we're spending it. And my budget is for next year is based more accurately on using the vendor history and using general ledger activity for this year. But the first is our the $234 on the lease on our printer. The second is $33,000 on down home. Next is electronic business products, $853. We go over our maximum allowable copy that the lease included. Then you jump down to we do have a storage, the credit card. We've got and I have to go back with Kat and break this out, but we've got the monthly Adobe and Microsoft SurveyMonkey and MailChimp charges. They're the software programs that we use internally, and they're charged to us monthly. There was the $4,000 in February was because we bought equipment. I do want to break that out to see if we bought two computers, and I want to break that out so that the accountants can put that in depreciable assets. Then you go down and you see Monster. We've got we posted jobs. We have a storage unit that we pay $218 a month, but we had two of them and they weren't billing us. So now it's we've worked. I think we've resolved that with them. Pitney Bowes, we have a contract with on the postage meter, and then TechBridge is our third-party computer consultant. And if you flip over the page, you can see they're very expensive. It's over $1,000 a month. But you see where $3,000, that was also equipment that we bought. So I think perhaps the equipment that was in the was for this audiovisual. Then telephone and fax, for about $400 to $450 a month. The internet's actually gone down over time. Then you get into printing. I'm sorry. You get in. What I did here is I broke these out by. You've got Center for Economic Growth membership. You've got chamber membership. We have Lisa and Kat were both became notaries and we paid their fee. There's entrepreneurship for all. That's arguably could have been a new initiative or a sponsorship. It was a program that Berkshire Tectonic asked us to support, and they had given us $250,000 in grant money the year before. I don't think we'll do it again because there were only 2 people from Columbia County that participated, and we can't support a program that doesn't have more leverage in terms of providing. Factual data is a service we use to get credit reports on people who authorize us to pull their credit because they want a loan. Must have bought something for $48 from Amazon. We've got then some memberships. The International Economic Development Council. We had the Middletown Record online for $1. We had the New York State Economic Development Council. We had subscriptions with the Business Review. We had the Greene County Chamber. We had the Hudson Business Coalition. We had EIDC renewal. And then we had the subscription to the Register Star. And then Michael Malinsky bought materials and installed this television system for us, and also purchased microphones for us. And then we had the New York State Economic Development Council. What you saw above was a sponsorship for their annual meeting, and their annual dues is here. We're members of the Farm Bureau. You know, I got to sort this better because the Pitney Bowes thing should really go up above. You know, pro printers included the printing of the annual report, stationery, envelopes for membership mailings. But again, that's $1,000. You know, Staples General Office is $486. You got to move that. You want to get all the newspaper and magazine subscriptions in the same place, and the memberships in the same place. I'm not sure we're going to join Upstate Venture Capital again. It's a good group, but we don't have people who are at that stage where they're putting together seed fund and startup stock. W. Mason. So, you know, if you take the 880 and the 488 between Mason and Staples, you know, that's 1,200. And I've always tried to budget $250 a year per person for office supplies, and that's about it. That comes out about right. Go to the next page. Well, that is the next page. So, you know, it becomes and what we talked about before the meeting was trying to break this out into better categories so that this doesn't look, oh, office supplies, 40 grand. You know, I think if you showed memberships and it was 15, and you showed IT and it was 12, and it would certainly be a little less. There'll be less questions because you'd have the information in front. I remember being university senate in college, and we were doing the university budget, and it included students, administrators, and faculty. One of the student representatives said, you know, what is this number? And the administrator, who wasn't keen on having students in this process, said, paper clips. We buy paper clips. So quickly moving, are there any questions? And we won't do this every quarter, but you know, we really haven't gotten several new members. We have a new chair. So what we did is I tried to break this out a little more detail in the budget.
Do you want, before you do the budget, you want to approve the treasurer's report?
Oh, yeah.
Yeah.
Go ahead.
I'd like to make a motion to approve the treasurer's report. Second. All in favor?
On the budget, I broke this out. The contracts for the 24,000 and the 10,000 is for real. We projected $16,000 for 2 projects. We believe that you know, there are IDA projects in the pipeline. We get 10% of the fee. There's going to be a $25,000 housing project next year for Galvin. So they're going to do one this year and one next year. So we're estimating 10,000 there. There are 2 other IDA projects in the pipeline, and so we put in another 6 there. Jessica and I have been working more on these office community renewal grants, where we act as the intermediary for the county and the developer. We can charge up to 15 grand, 16 grand on each one of them.
Mhm.
And so I was conservative and only said we would do one, but we think
I
we
met
can.
with somebody yesterday and they're interested.
Yeah.
If we get the county on board,
Yeah.
that would be.
And then other, I just rounded it up because I think when I got to the bottom, I was $5,000 off, but it is a budget. County contracts, you know, these are all contracts. So, I mean, you've got 40, and if you, I'm sorry, I was looking at the wrong side. On the IDA, I've got $25,000 this year. So there's, you know, 2.5 projects. On the office community renewal, I have 2 grant projects. And on other, I have 10. Then if you go to the county 23 budget, We get the 460. They've agreed that that's what they're going to give us again. We get 85,000 on Columbia Forward on the 3-year contract. I put 17.5 out of the 50 for the Columbia Forward, but that's that matches an exact expense line. The housing, they've given us $250,000 for 3 years, so I put in 75. And broadband, I asked for another 60. We are working with the county and the Association of Counties to see. State just announced broadband county grants for planning, but they would pass that money through to us rather than use ARPA money. Grant income. This money is really the Angelo final payment. They're on their last year of their loan. CEDC interest. We're at $71,000 this year, and I budgeted 76 for next. But if we get more money out on the street, I was adjusting it because some of our loans that are in the pipeline or in the portfolio are at 5 and 6%. Where are we going back to 5 generally? 5. So I think that's a conservative number. The membership and sponsorship we discussed. Other income are fees and different things. And I think this year we on budget for that. So I projected out 12, so I left it at 12. On the 230, I assume that we might get a drop in TA money because you just don't know what they're going to give you for July to December of next year. But based on the fact that Martha has done 21 loans in the fiscal year that they will use to calculate how much we receive, and that's the largest we've ever done in any one year. And last year we did what, 19? Yeah, 8. So they gave us 232,000 last year, but we don't know if their funding was pumped up because of COVID funding. So I kind of put us back to 90, so that again, I want to be conservative. And then that gives us our total income. Then on the expense side, I think these pages out of order. No, expenses. Grant expense is a $5,000 match against the income. Conference and training, was $750 an employee. My consulting contract, have a 3% increase. I haven't had an increase 3 years for 2 years. Then QuickBooks consulting, the consulting fees. Basically, I split it out. I don't think, because remember we had more consulting, we were doing new initiatives. Direct program expense, I thought maybe we had to put up the pipes and drapes for next year's annual meeting, or have eggs Benedict instead of facilities. I based it on the increase. I based it on the increase in the rent, which is 3% for a half a year. Grants to CRC. I don't know why I put 15,000 in there. I'm gonna go back and look at that because we've never done more than 3 or 5, so I do have to adjust that. But we did 5. Their total budget's about 5, so I'll pick up 10 here. The SBA interest, Martha and I calculated that. They don't charge much interest at all, and if you get a new loan, the 400,000 we just got won't be. They give you a year before you have to pay interest on it. I think I need to move. I'm going to move some of. I think I must have gotten confused with the. I'm going to up the insurance. The SBA interest. We put at 12,000. The EIDL interest, if we keep that loan, is 2,800. And the micro business expense, if we're getting more money from the government from the SBA for that grant, we should be doing more field work. So, I wanted to keep it at least at 50 grand. New initiatives, it's gonna be hard to say no to Dr. Drummer if she wants to keep that program going, so I included that. The broadband is a direct income expense from the county. Housing will come out of the housing grant that we have. Columbia Forward comes out of that grant. And the Columbia grants are the $50,000 to give the borrowers money. And then I took Stockport Park out because we didn't have it this year. Again, trying to be realistic but conservative. The office expense, you'll see I started to break it out in much more detail. And when I get to when I add all of that up, it's more than we spent last year. So basically, Lisa, and then on bank service charges, we're meeting with KeyBank today. Pat had pointed out to me that they had increased one of the service charges. So what we're doing is I'm going to we have most of our accounts with them. But all these, they give you a credit for your balance, right? So they don't give you interest anymore, but they give you some type of a credit against fees based on what you have in the bank. And we have over $1 million. So the fees actually, if you added them up on the statement, are probably higher, but when you net out that credit. But I also want to talk to these banks. Previously, we were making 20 grand a year in interest because we were getting 2% interest on $2 million. And, but not all of the accounts are eligible. And now we're getting like nothing on interest in income because rates drop so low. So as rates go back up and they have to provide a more competitive return on deposits, I want to be sure we don't get, forgotten, and make sure we're in accounts that make us eligible for that. Salary expense, you'll see is up significantly. But it's up almost $200,000 from last year's budget, but we are getting $150,000 of that from the county grants, and we've had $45,000 of savings from last year. So then professional fees. Last year we didn't break them out. This year I broke them out. I did up the accounting, but because I moved the the CFO or the bookkeeper service, that I moved that up above into a separate line under consultants. And then I increased public relations modestly. So, with allowing me to take the TRC grant and the insurance and up that and stay within this total income and expense, we can approve the budget so that Lisa and I can work on the Paris report, because we have to submit this to the board on the 28th and file it by the 30th with Paris. And again, it's only a budget, but I think it's and I think we've demonstrated that with the work that we all do here over time, that pretty good at budget.
Can I get a motion to accept the budget? All in favor?
Okay, we can take a 5-minute executive session to discuss matters relating to personnel.
I took it the IDA was going on tour, the public site, is it here?
It's gonna be.
Can I have a motion to go into it? Second. You want to mute it?
Yeah, yep.
Yeah.
promise not to be this detailed next time, but I think it's helpful for you to, when you're looking at
Appreciate it.
stuff, we are gonna hire, I'm gonna replace CFO for hire, who was the group we were using. They just weren't understanding what we needed. So, yeah.
Yeah.
And then we can.
Lisa, we're out of executive session.
Hopefully she can. All right, motion to adjourn the full meeting.
No public comment?
Oh, yeah, public comments. Turn this.
No public, right?
Yeah, there weren't any before we left.
I'll make a motion to-
To adjourn the meeting.
All right.
Thanks.
Thank you very much. That was